And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. It is Monday, October the 24th. My name is John Hoagland. Thanks for trusting me with your time as always, and hoping that you had a good, restful, and productive weekend. Looking forward to seeing what we've got in these markets for us this week, of course. And we're always focusing on finding accurate context, thinking about good risk management, and remaining patient in our trading. Looking forward again to seeing some good success for our traders today. As far as economic numbers this morning, at 8:45, the PMI composite preliminary is due out. I'm going to review what we've got coming at us this week. We've got some more housing information. We've got the Case-Shiller and FHFA housing price indexes both tomorrow at 8 a.m. Central. Consumer confidence tomorrow at 9 a.m. On Wednesday, international trade in goods. New home sales at 9 a.m. Central. And, of course, the petroleum status report at 9:30. Thursday, kind of a big day. Durable goods orders, GDP preliminary, and jobless claims, of course. We are always going to be very interested in seeing what the preliminary for the GDP has for us. That's all at 7:30 Central Thursday morning, and then, of course, the natural gas report, and then income and outlays, employment cost index, Michigan consumer sentiment, and pending home sales on Friday. So we've got a few more economic numbers to contend with for us this week. As far as what's going on in the markets right now, we've got equities higher, ready to open higher. Lots of talk on perception that the Fed may be ready to slow the pace of rate hikes already. Seems a little early for that to me, but it's okay. The European PMIs, we got our PMI comp, which is both manufacturing and service index due out here at 8:45. The European PMIs indicate continued contraction, and again, that's ahead of our PMIs today, including manufacturing and service PMIs. Crude prices have softened a little bit here, but they're still kind of recovering after last week's after the weak European PMIs after last week, really just kind of remaining range bound somewhat. It's going to be an interesting week, I think, in crude oil. Got to be patient, though. Got to be patient. The market is really just it seems to be kind of stuck between supply and demand. It's going to be, I think, another interesting and challenging week again in crude oil and in gold. We've got some interesting things going on in the equities, of course. We'll check those out here on the charts very shortly. As far as the VIX is concerned, it's actually a little bit higher this morning at 30.17. Dollar index 112.30, a little off from where we were the end of last week. And the yield on the 10-year off just a little bit at 4.2%. As always, make sure you hit the lucky like button. Share, comment, question, feedback, heckling, and love are always welcome here on the Market Forecast. Make sure you subscribe to our YouTube channel so you get notified when we do go live. Big day today. We are adding another session of Make Hoag Money. This one's going to be at 2 to 3. We're going to catch the close with Make Hoag Money today, and then, of course, the open tomorrow, the close on Wednesday, and the open on Thursday. So four sessions of Make Hoag Money this week. It is also Monday, which is group coaching. So the first link that I put into the chat is for Make Hoag Money today. That's the direct chat to That's the direct link to register for Make Hogue Money today at 3 p.m. And then the second link is, of course, for group coaching today. That's at 1 o'clock p.m. today. So we're going to have the market forecast. We're going to have the Make Hogue, we're going to have group coaching at 1 p.m. Central, Make Hogue Money at 2 p.m. Central, and we're going to do the recap at 3:15 today to give me a little bit of time to prepare for the recap. We'll see how all this works out, and we'll see what all this is how it all works out, and of course your feedback and your ideas, of course, are why we make these changes. And if there's better things that we can do, make sure that we are thinking about them and letting us know. Again, questions, feedback, jhoagland at topstep.com. Questions for Make Hogue Money, same email. Questions for group coaching, I should say, same email, jhoagland at topstep.com. Good morning, Theo, first in the room today. The room opened up a little bit early, and Theo was right there. You win the prize this morning, Theo. Dark Kevin, Caprice, Scott Saw, and he conquered. Patrick, Joel, MB, good morning. The Rooster, Shaw Cunningham, George Duquesne, Sonny, Serenity Trader, good morning. My guy, Vince, got to have a chat with you, my guy. Charles March, Orion, Dimitar, Sarah Hall, good morning, prayers and love as always to you, Sarah. Dan Trader, good morning. JD Royalty, Poser, good morning. It's a good day to be patient and catch some moves. Always a good day for that Poser. Dowitzer, good morning. JD Royalty, I pray we'll have a great trading Monday. Let's all stay within our trade plans and risk management. Let us also stay open-minded and emotions away. Enjoy Kings and Queens. You must have been watching King of the Dragons last night. I can't believe it's going to be a whole year before we're going to be able to watch that again. Rob T, good morning. Unicus with his quote for the day. Always appreciate these, Unicus. Knowing is not enough. We must apply. Willing is not enough. We must do. Bruce Lee, that's a really good quote. Whether you're in Kung Fu or Kung Trading, it's always the application of what we know that's going to get us to where we want to go. Oh, great quote, Unicus. Brody Mason, good morning. Good night's sleep. Dogs hit the rest. Ready for the day. Good. Good. George Duquet. Actually, my son is homesick today, so Lacey is laying in bed with my son, making sure he's well taken care of. Trading Research, good morning. What's your advice on what to do if you're talking over-the-counter meds for a common cold? When you're taking over-the-counter meds for the common cold or something like that, most jobs, I would still go to work. It depends. Trading Research. I think on each individual's response to the over-the-counter meds for the cold. I know when I take them, I have high blood pressure, so I have to take Quercetin HBP. But basically, all of the cold medicines that I take make me feel like my head is floating just about a half an inch above my neck. So I know I'm a little bit compromised. When we were on the trading floor, that was our job. We had to work our way through it, and sometimes we were at risk, or others were at risk. But it's all in how it makes you feel. If you tolerate the meds well, then I'd say you should go ahead, try and stay patient, maybe trade smaller, but see how it goes. I hope that's not bad advice for you. DA, good morning. Rusty Golfer, my spirit animal, is here. Kevin Haffey here. Good morning. Kevin sent me an email over the weekend about my taking the opposites trade with the episode from Seinfeld where George Costanza decides he's going to do the opposite of everything that he thinks he should do, and it works out magnificently for him. Funny, and I still call those the Costanza trades. Nasdaq, good morning. Tom, my brother, good to see you. I love you, man. It's great. Good to see you. I don't see Rick here, but I got my other brother, Tom. Good to see you. Serenity Trader, what might the Hang Seng be limit down today? Portend for our markets. I see a greater separation between the Asian markets and the U.S. markets. Is it going to affect things? So far, not so much. GED, perfect, registered, good. Jules, GZ, good morning. JD, Frederico, Denise, good morning. Cesar, Mango Heist, is it possible to go for prop trader to a PM or a hedge fund manager? Well, anything is possible. You got to be a really good prop trader. And then there's the education, there's the registration, there's all kinds of things you have to achieve to become a hedge fund manager. Omid, good morning. Haggle Matters, good morning. Kevin, document your performance. Define your C. Kevin, I believe he's a little further along with the registration for all that stuff than I am. So Kevin's got some good advice for you here in Mango Heist. Document your performance, define your strategy, record your daily gross returns, learn how to compute monthly RORs in the NFA compliant format from the NFA website. Yes, the NFA is they're not going to make it easy. In the NFA web section under CTAs, put together at least 18 months of performance, 12 to 18 months of performance. Jerry is awake. Yes, we have to be a good prop trader. It takes years. Yes, anything that's that registered or regulated is certainly going to take years, right? Okay. So great. Thank you, Kevin, for the help. Thank you all for joining me today. We're going to take a look here at the E-mini S&P is on the daily chart right now. So volume and open interest increased on the third day testing weekly kickoff high last week. The weekly kickoff high remains 37.78, and it's looking more and more like we're going to open the trading session today with a gap and above that level. Here's the move to the upside. We added 19,000 in open interest, and you can see a little bit of a jump in volume in futures. In the New York Stock Exchange, there was a pretty decent jump in volume on Friday as well. 12% greater. It's another 500 million contracts traded on Friday than there were on Thursday. So we've got some decent volume pushing this market to the top side. We always say don't fade a strong equity market on Fridays, and it certainly pretty much rang true for the most part. Hypothesis number one is seek opportunities to buy weakness. The most important feature of the profiles in this daily chart is this excess that we put in on the 13th. It was that day that said to me, we need to start looking for opportunities to buy weakness. And the fact that we're going to be opening above weekly kickoff high, an important inflection level that was resistant last week, is also something that I'm really kind of focusing on this morning. So here's our big up move on Friday. Test. Do we have a late spike? Well, I'm calling this a late spike. The L period here drove higher and was able to kind of maintain price at a higher level through M period. So if we're looking at this as a late spike, the 37.55 is the base of that late spike. Maybe moot because it looks like we're going to be flat out opening above the high of the late spike, above an important inflection level that not only is weekly kickoff level, there's two naked points of control of volume and a TPO point of control there. It's last week's high. This is a very target-rich environment. So the fact that we're going to be opening with a gap above the late spike tells me that prices are currently being accepted at higher prices. May make it a little bit more difficult to get into a trade today. As long as we hold this level, long as we hold weekly kickoff and stay out of last week's range, I think we're going to be in pretty good shape. Now, if we do get into last week's range, the base of the late spike, I think, is the next level where we might look for an opportunity for an execution. But this high target area here, to me, it looks like the excuse me, most important and largest area of possible execution in either direction, really. We're looking for acceptance of higher pricing. Unable to accept above this high target area could be the first sign that we maybe need to look for a deeper pullback before looking for any longs. Remember the late spike. Late spike rules. Open above the late spike is acceptance of higher pricing. All of this is probabilities. All of these levels are zones. There's no absolute anything that is going to happen. And as we always say here on the market forecast, ACH, anything can happen. Just looking at the nuances and the probabilities, as long as we can hold above the base of the late spike, really, I'm thinking we're looking for opportunities for longs. Here's the crude oil. Stuck between supply and demand, kind of like a piece of rice between two chopsticks. Open interest and volume were both lower on Friday. We lost about 5,800 in open interest. That's estimated. We've got two dojis, really just indecision going on here as the crude oil market looks for new information. These trendline extremes may offer some decent opportunities for executions, as basically it's the extremes of the overnight high and low. Take a look at the 30. And this isn't really presenting in the right spot here, but it's right about there. This goes pretty far back. So, overnight inventory to the short side. Looks like we're going to be opening with a gap, so we have gap rules. We tested down to this naked volume point of control almost to the tick in the overnight. That could be something we might revisit at some point today, but overall it seems as though this trend line is largely holding support. Again, we do have gap open. We can't close the gap relatively early. We look at for opportunities in the direction of the gap, which I would be looking upon acceptance below this trend line here. There's multiple possible entries and exits in this market. We've got weekly kickoff highs on the outsides. We've got last week's low. We've got last week's high. We've got this naked point of control here and this naked point of control here still yet to be checked in the overnight session. And then we've got these trend lines here. We're really going to be focusing on possible structure at the extremes of the levels that we're looking at, and there's a lot of them. So use caution today. Look for daytime frame structure against something from the longer or the shorter time frame levels that we just mentioned. Again, weekly kickoff high and low. 8180 to 8780. That's weekly kickoff. Last week's high and low in these naked points of control and these trend lines. There's 4 different levels for us to look for opportunities above and below this market. Caution. Be careful. Nasdaq. So the Nasdaq has got some work to do. It's a little bit behind as far as our equities are concerned. We did see a decent increase in open interest of approximately 8,200 on Friday. We saw some decent volume on that push to the upside. Again, the most important feature of the profiles or recent profiles and this daily chart is the excess that we put in down here on the 13th of October. The market has been working its way higher ever since. In short time frame, we've got upside structure against long time frame downside structure. Again, the S&Ps are at a level where I think that might change. The Nasdaq still has work to do. Last week's high, however, is in play. Hey, there's my brother Rick. Tom's here too. Here's the 30. So here's Friday with the big volume and the open interest increase. We do have a kind of a late spike here. 11,321 is the base of the late spike, just about down here. Right now, it looks as though we're going to be opening with a gap and above the outright above the late spike. So initially, things are looking like nuances are saying we are accepting higher pricing. So we're going to try and work that way. Overnight inventory is largely flat. So we don't have overnight inventory to work with. It really comes down to, are we going to close the gap? If we can't close the gap, we're going to have to get above last week's high, and then maybe we can start working our way towards weekly kickoff high, which the S&Ps are currently fighting with, the Nasdaq lagging behind. And gold. All right, so we had a breakout to the upside on Friday. We were holding this line. We broke out to the upside. We lost 2,700 in open interest. Obviously, a profit-taking event on high volume. I like the idea that the volume was high, and we did leave some excess at the low here. The volume on Friday was, I think, kind of curiously strong. Keep your eye, of course, on the U.S. dollar. Here we are. Here's Friday's excess. Excess in the profile, excess in the daily chart. We have the market moving higher. Overnight inventory, we're looking a little bit short here. Here's where we opened. Here's where we are. So we're a little bit short. We're back in range. We're back in value, suggesting that we try and stay a little bit patient. What is this doing here? That does not belong there. That is last week's low. Last week's high. Should be here. Sorry about that. So opening in range and near value, there is the possibility that this market could come in to repair. We've got single TPOs right here in the TPO chart. High volume node to high volume node to initially throughout the beginning of the session today. I'm going to be patient, look for opportunities at possibly those high volume nodes. Here's the euro. So there's not much we can really say about the euro. We did add some open interest, 3,100 on the up move on Friday on good volume. But where is the market really? Was this a breakout type of day? No, we're still range bound. We're still holding downside structure in the longer time frame, upside structure in the short time frame. Do you think maybe we trapped some longs up here a little bit? I mean, that's last week's high. We're coming off a little bit. Watch the dollar, of course. Take a look at the 30. See if there's any help here. So, well, here's our open. We're holding some short inventory. It's kind of similar to gold, really. I mean, gold had the big excess at the bottom. Continuation. We lost open interest, however, in the euro, but the volume was really good again. We lost we gained open interest in the euro, where we lost it in gold. Volume was really good. Overnight inventory to the short side. Monday, I'm staying patient. We could actually fall into repair. We do have some single TPOs here on the TPO chart, where if we open between these two high volume nodes, we may check to both high volume nodes to repair that area before moving away from it. So we got this was checked on Friday, so we'll take that off. Try and stay patient. Opportunities will continue to come. Now, the 10-year. I see Rick's talking about metals are thinking lower rates in the future. And I think that there's a lot of thought about that. There's a lot of folks thinking that the pace of rate increases at the very least is going to slow. So now, Friday, we have a big loss in open interest of 66,000 contracts. There was a lot of profit taking. The market has continued to try and push, but it's still basically toeing this line. And once we see a big move or acceptance above that line, I think there's a really big opportunity there. So just a lot of short covering, profit taking on Friday. Take a look here. We tested the weekly kickoff low. It still remains at the same level. It's 109. Big loss in open interest, lots of short covering, lots of profit taking. Market did open with a gap and has since closed that gap. Or are we thinking with this excess at the low here, we should start looking for opportunities to look for longs? If so, be patient. We've got kind of a target-rich area here, value high, settlement, and point of control from Friday, which might be interesting. We have any overnight inventory? No, not really. So we're going to be patient looking for daytime frame structure to present itself before really trying to get too involved in the 10-year. And natural gas continuing to try and push lower, getting a nice pullback so far here this morning after the open, it looks like. We added 3,500 in open interest on the continuation move to the downside yesterday. This is now the December month. December is the front month, so you should be adjusting and trading your December month if you're going to be trading the natural gas. And we've been one-time framing, in essence, since we broke out down here. Here is where our measured move from our head and shoulders brought us to, and we are attempting to continue to push lower. We've taken out these swing lows. The market does seem to want to continue lower. We added 3,500 again on Friday. Volume is blurry because of rollover. Here's the 30. You're getting a nice pullback now. All right. So overnight inventory is probably starting to look a little bit flat. Here's where we opened. Here's where we are. Testing the low, can't in the overnight have any real acceptance below last week's low. We're starting to see some short covering more than likely, and there's tons of visuals above for us to go back and recheck. Every point of control has remained naked since the breakout. Lots to look at up there, and if traders are focusing on it, you don't want to fight it. So this might be the first day that we, in probably 6 or 7, that we don't see one-time framing to the downside. But again, I'm thinking it's probably short covering, profit taking, and I still can't figure out why natural gas is as low as it is coming into the winter months. All right. Haggle matters. My 30-minute charts, the value area, I always put at 70%. Some people put it at 68. I always learned at 70. There's nothing that's right or wrong about that because all of those levels, value high, value low, are zones. There's nothing finite in futures. Adam, will there be a promotion for Halloween? I don't know. Nasdaq, I look at this. This is the CME Group Bulletin. I'm going to put the link in. Whoops. I'm going to put the link in and show you briefly. Okay, so there's the link, and this is what you're going to see. So if I'm looking, let's say, at crude oil open interest, I'm going to open energy futures. This says preliminary. The final will come out around 9:30, 10 o'clock. It takes the exchange a little bit extra time to be able to calculate the open interest. So we've got open interest here. Got settlement price, volume, and open interest. So the December contract here, we see we added 729, but I'm always looking at this. Okay, we lost more than that number is saying. We lost 5,700. Lost 5,800. So I'm always checking the total number of open interest and the total volume. These are the totals for crude oil. Check the total, even in like equities. Here's the S&Ps. We've got 4,800 already additional in the March contract on Friday. So we've got 18,000 total of gain in open interest. And that's what I'm looking for, is the total gain in open interest. Hope that helps. If you do have more questions about that, join me for the group coaching, and we'll see what happened. All right. All right. So don't forget group coaching today and Make Hogue Money to 2 o'clock to 3 o'clock, another session of Make Hogue Money. So bring your good trade ideas. You got to find a way to make me some money. Take your deep breath. Stay humble, grateful, and creative today in your trading. Looking forward to your success. Blessings to you all. Be good. Trade well. Get out there and profit today. I'll see you in the proverbial pit here in just a few minutes. And I'll see you for group coaching at 1 p.m. Central today. Looking forward to it. Until then, trade well.